Record-breaking travel demand, rising credit inquiries, and a sector that just reclaimed its pre-pandemic workforce. Welcome to the Commercial Pulse update for June 23rd, 2026. The Experian Commercial Pulse is a bi-weekly report offering a snapshot of the US economy and its impact on small businesses. We hope you find these bi-weekly updates insightful. Remember to hit subscribe to continue seeing us in your feed. The labour market remains remarkably stable. Unemployment held at 4.3% in May for the third consecutive month, continuing a trend that's persisted for nearly a year. Wage growth also remains positive, providing consumers with spending power despite ongoing inflationary pressures. Inflation increased to 4.2% in May, reaching its highest level since 2023. While inflation remains below peak levels experienced in recent years, rising costs continue to create challenges for both businesses and consumers. Energy prices were a major contributor, increasing more than 23% year over year. Small business optimism declined slightly to 95.3 in May, according to the NFIB. While business owners remain generally optimistic about future conditions, uncertainty remains elevated and continues to influence investment and hiring decisions. Consumer sentiment improved to 48.9 in early June. While still below historical averages, this marks the first increase since January and may indicate that consumers are becoming more comfortable navigating today's economic environment. One of the more interesting dynamics in today's economy is the contrast between rising business failures and continued entrepreneurial activity. Business bankruptcies reached 25,960 in the first quarter of 2026, up from 24,737 in the previous quarter and the highest quarterly level since early 2015. At the same time, entrepreneurs continue to launch businesses at an extraordinary pace. More than 524,000 new businesses were created in May alone, and since 2020, business formation has consistently remained well above pre-pandemic levels. What this tells us is that the small business environment remains highly dynamic. While some companies are struggling with higher costs, tighter margins, and more competitive operating environments, new businesses continue to emerge, pursue opportunities, and enter the market. Worth noting here is the composition of that growth. More than 93% of new business formations are sole proprietors. For lenders and risk managers, that distinction matters when evaluating credit demand and portfolio exposure. Those dynamics play out differently across industries, and this week's Commercial Pulse report takes a closer look at one sector where the numbers tell a particularly compelling story: leisure and hospitality. The world of sport is giving America a lot to celebrate lately. The NBA championships, the FIFA World Cup, and those two events alone are drawing travelers by the million to the US, where the leisure and hospitality industry is enjoying a hot summer. With almost 140,000 businesses in the hotel, RV, campground sector, and another 60,000 sightseeing and travel services businesses, few industries can illustrate the strength of consumer demand better than travel. After expecting record-high travel on Memorial Day weekend, AAA now projects that 72.2 million Americans will travel during the Independence Day holiday period this year, setting another record and surpassing last year's historic total. Combined with the FIFA World Cup taking place across North America and celebrations surrounding America's 250th anniversary, travel activity is receiving an additional boost that's creating opportunities across the sector. The impact is already visible in the employment data. Leisure and hospitality employment has surpassed its pre-pandemic peak, with more than 17 million Americans currently working in that business. After one of the most dramatic disruptions in modern economic history, the industry has fully recovered its workforce and continues to expand. However, challenges remain. The sector's unemployment rate stands at 5.8%, above the national average of 4.3%, and this suggests that while hiring has recovered, labour market dynamics remain more volatile than in many other industries. Another challenge comes from rising costs. The travel price index increased 9.8% year over year, more than double the overall consumer price index. Much of that increase was driven by transportation expenses and fuel costs, which surged more than 40% compared with a year ago. Looking at commercial credit, Experian data shows average commercial credit inquiries per business within leisure and hospitality have increased from 0.07 to 0.21 since January of 2023, representing more than 181% growth. Much of that activity is being driven by hotel development and expansion projects as businesses position themselves to capitalize on sustained travel demand. Perhaps most encouraging is the sector's overall credit performance. While delinquency rates tend to fluctuate more than those of other industries due to sensitivity to fuel prices, labor costs, and consumer spending patterns, commercial credit scores remain stable across subsectors. This suggests a resilient industry that has learned to adapt to changing economic conditions while maintaining credit quality. For chief risk officers, lenders, and risk managers, the takeaway is clear. Demand remains strong, investment activity continues to rise, credit quality remains stable. But profitability will be increasingly dependent on how effectively businesses manage rising labor, fuel, food, and operating costs while continuing to deliver value to consumers. And there's a lot more on the leisure and hospitality industry in this week's report, so be sure to subscribe. If you would like to deep dive on some of our industry insights, reach out to your Experian account team. And if this update was helpful, please like and subscribe to our channel. Last, remember to keep informed to stay ahead, and we'll catch you on the next one.